Welcome to the Remarkable Retail Podcast, Season 2, Episode 17. I'm Michael LeBlanc.
And I'm Steve Dennis.
All right, Steve, we got a solo episode today. I've got you all to myself. You know, we really haven't done one of these all season. You and I were talking enough, Mike. It feels we've reached a turning point in both the pandemic, which of course means a turning point in the retail industry from, you know, focused on the COVID era and getting through it and into what comes next. And I thought, you know, we both thought this would be a great opportunity to kind of take a pause and just you and I chat for an episode about lots of stuff that's going on and some thoughts for the future.
Yeah, I do feel like it's a good time, and we have quite a lot of news from at least, mostly from U.S. retailers in terms of earnings. So yeah, I think it's a good chance to dig in. But we will be back next week with an amazing, inspiring guest, Rob Smith, who's the CEO and founder of the Fluid Project and Get Fluid. He's a deeply experienced executive, worked at quite a few big retailers, but now is off on his entrepreneurial path. And it's a super interview, both from a retail strategy perspective, and we get to learn about his personal journey and how that all intersects with what he's doing professionally. So you'll want to definitely check that out next week.
Yeah, and we'll actually be wrapping up Season 2 in mid-June in a couple of weeks with a really great guest that'll give our listeners a big picture perspective. Matt Shea, president of the NRF. So that'll bring it all together. And then maybe next episode, you and I can chat about how we're thinking about Season 3 and what Remarkable Retail looks like next. But let's jump right in. We got a lot of stuff to cover, and you and I were talking off mic. How do we frame up all the thoughts that we've been having and news that's coming out, and this turning point, right? So you know both Canada, the U.S., the UK have got the vaccination programs underway, and they're moving ahead. And you know, U.S. The CDC said take your mask off if you're fully vaccinated. That seems to have triggered lots of off masking and sales of tooth whitener, I was reading, interestingly enough. Well, let's start at the beginning. You know, Q1's always a noisy quarter anyway. And, you know, so we're seeing some results come out of the big hitters. You know, what strikes me is, and you as well, is how and why do the analysts always get it so wrong? Like,
well, that's what really struck me in reading through the earnings releases. I mean, I certainly have seen analysts get things wrong, but also get things right in the past. But it seemed like every earnings announcement I've read in the past 2 weeks, basically the story was how wrong, or, you know, how great it was in one perspective that the retailer had just crushed the sales and earnings estimates. So, but yeah, way off on a bunch of really big retailers that you would think would be pretty easy to understand. I mean, I have one theory, which is that particularly for the more physically anchored retailers, that we just haven't seen such large swings in sales. I mean, it's not very often that you have a retailer report, 40% increase or something like that, at least among the traditional retailers. And I think they probably underestimated the degree that last year, was such, the quarter last year was, such a debacle for non-essential retailers in terms of, extra expenses, stores being closed, inventory liquidation, so it's just very hard to anchor on that. And then you have, in some cases, as we'll probably get into, some of these retailers with very big increases. And I think they're leveraging their fixed costs, right? And so you can take a decent size increase and turn that into a massive profit improvement. So I think they didn't appreciate those dynamics, but we don't often see such wild fluctuation. Yeah,
I mean, and it's also, I think, nested in a bit of the whole narrative around the false narrative around the retail apocalypse. It's like, what do you mean they're not dead yet? It's kind of like that Monty Python skit, right? Of course they're not dead yet. You got that wrong to begin with, and stores still matter, and get your head around that. So I guess it's kind of hard sometimes to sort through all the news. I mean, the other thing is the comp story, and the comps for 2021 are just going to be so strange, right? Because on the other side, you've got a lot of retailers who are trying to comp off a mass run for toilet paper or bread makers. And, the numbers are very distorted. I mean, if you think back this time of the year and a little earlier, I know here in Canada, there was stockouts on shelves. There was the first time Canadian consumers, probably in most of our lifetimes, had seen, empty shelves. It wasn't quite panic, but it was like, oh, this is this. And so people started loading up. And it distorts everything one way, shape. I don't know how retailers are going to make sense of this year maybe the best approach is just to index against 2019. I mean, how do you make sense of, comping year over year numbers against such an odd year, right? 2020.
Yeah, I certainly believe it's more relevant to compare to 2019 because of just all the distortions. This quarter in particular also, and I know this varies a little bit by market, but, most of the quarters are the quarters ending in April. So it's February, March, April. And as I'm sure people will recall, that March was really when, in most places, COVID was really starting to take hold. So, you kind of had the panic buying, stock up stuff going on in February, maybe the early part of March. Then you had stores closed if they were non-essential. So if you were in the apparel business or whatever, if you were in the grocery business, it was on fire because people weren't eating out. And then, if you're in the home business, then and pet business, then people started to, so you just have this reallocation of spending that in some cases was driven by store closings. In other cases, it was driven by just how people were spending money differently, given work from home and all this other stuff. So it's pretty hard to make sense of it, though. I think as we go forward, it will get easier. We just have to anchor, I think, on the right comparisons.
I mean, my goodness, the U.S. consumer was like a Timex watch. Took a beating and kept on ticking, man. Because the a little bit of financial incentive for sure, some stimulus incentive, but the retail numbers were just blockbuster. And I guess, but how many outdoor sets of couches can you buy and barbecues? Well, in my case, I buy a lot, but,
you're an outlier. I mean, certainly in the U.S. and a few other markets, there's definitely spending that's being buoyed by the stimulus, right? I mean, and a lot of the retailers reference that.
Particularly the value ends of the segment, right? Because if you're just making ends meet week to week, that money goes directly into spending, right? I mean, it may go into paying your rent, but it also, it doesn't sit around in an investment vehicle, right? It gets spent.
But you've also got, again, I'm not sure how well this applies to markets outside the U.S., but the home market, the real estate market is just on fire. The turnover of homes, so that tends to drive a lot of spending. People trading up to a bigger house, you got to furnish it, et cetera. You got people investing in their homes if they're going to stay, or maybe to put it up for sale. So there's a lot of very kind of home related spending. I saw a statistic somewhere that something like 21% of the U.S. stimulus checks were spent on home related projects.
Wow.
But to your point, how much of that? Like obviously, if you're going to build a lot of houses, people are buying lumber, right? If you're moving into a new house and it's bigger, you got to buy, another bed or, different furniture or whatever. But some of those things are very much one-time purchases.
Yeah.
But how long will that, we get past the stimulus perhaps in the next month or two. So still probably part of the second quarter, but not as important. But then how much of this momentum keeps going because of some of these underlying trends, or just like in the apparel category, well, if you're starting to go back to work more, you're starting to go out to dinner or go to a show, all those kinds of things that tend to drive apparel accessory type purchases. I mean, that's a whole new dynamic that's coming back as markets open. So it's just a lot of moving pieces. I certainly think in general is very positive for retail. But certainly, as you point out, I mean, in some cases, you still have lots of people that are struggling to make ends meet, even pre-COVID, but unemployment tends to still be disproportionately affecting lower income people. So
what'll be interesting to see, my expectation is that spending in retail will start to decelerate as as we get our lives back to normal, we start doing all the things we used to do. We start to travel and we start to spend our money that way. And we start to go to restaurants. And I don't know if you've seen it, the car sales in America are so strange. You've got people paying over MRSP on the lot for cars. So that tells us something really interesting is going on. And that, I wonder, anyway, we might be down a rabbit hole on that one, but, are people still afraid to get on mass transit? Are people going to travel for the summer, in inter-country, which I think is a lot happening in most countries, right? A lot of tourism is, this is a good, if last year was a good time to be a plexiglass salesperson, this year's a great time to own an RV rental business, right? What a great way to go see your country. We have a great audience from all points of contact from around the world, not just the U.S., Canada, but around the world. I mean, I was talking to Oliver Banks yesterday from the U.K., and they're coming out of it well, but there's a few bumps in the road with some variants, and what they're looking carefully, they were already ahead of, in many ways, they're certainly ahead of Canada. I think they were at or even ahead of, in terms of grocery e-commerce, was actually more advanced in the UK than it was in the States, 7-8%. Right. And so in some ways they're interesting, and they're trying to make sense of it. Their high streets really got decimated, even pre-COVID, were getting decimated. So they're trying to make sense of that. Australia is becoming the hermit country where they're not even allowed people in or out until mid 2022. And what do you make of China? I mean, China had this little speed bump, really, crushed COVID. It crushed them for sure, but then they crushed it, put it to an end, and it really didn't slow down their economy. And of course, the demand for their manufacturing has just been, bananas, right? I mean, container shortages, and we've never seen container prices and traffic like we're seeing today. This just one thing leads to another, right?
Yeah, well, I think there's a whole dynamic around. I mean, obviously, we're going to see different markets come back at different rates, either because of shutdowns or pace of vaccinations, those kinds of things. One of the things I think is interesting, maybe just even going back quickly to what you were saying about cars, is I think from a consumer demand standpoint, maybe there's a little bit of, I want to treat myself because it's been tough. So maybe I buy a nicer car, or I buy a car a year or two earlier than I might have otherwise. And I'm sure that plays out in other things as well. But the supply side is really interesting. There's this big chip shortage. So I know I have a client that's in the automotive industry, and they were saying to me that they just can't make the cars. So it's a little unclear how strong the consumer demand is fundamentally, but certainly there's a supply shock. And as we've seen, the Suez Canal thing, I mean, there's a bunch of stuff that is making it difficult in some cases for the supply to meet the demand, right? And then you've got China sucking up a lot of commodities and raw materials, so that's putting price pressure on. So obviously there's a bunch of concern. I mean, aside from whether or not you can get the product, period, there's also concern about input prices, whether we're talking about the cost of materials, but also labor too. So I think there's a lot to be revealed in terms of input costs as we get into the second half of the year, because even if the consumer's feeling pretty good, I mean, there's definitely a point at which, it's basic economics, right? Prices go up, it tends to tamp down demand to a degree. So I think, again, kind of beat a dead horse here. You just got this really noisy quarter because it's sort of half shut down, half not. Then we start to get into the second quarter where it's a little bit easier to do the comparison, but there's still just so many moving pieces.
Well, and I think if you're familiar with it, we start talking about financial analysts in the financial sector. They call when a stock kind of goes up but really has no fundamentals, they call it a dead cat bounce. And by the way, I love cats, so nobody send me anything hate mail with cats. I love cats. But basically the theory is, if I put it in the context of retail, I think people are just going to rush into stores, right? Because it's just, I certainly is going to be the case here. And in countries where it's been, really clamped down, it's like, I want to go back to the store, some pent-up demand to be just normal again, and go to a store. And then that's when it's getting interesting, right? So I'm not sure what lessons we'll be able to learn for the next quarter or two. Holiday will be really interesting because things will be pretty normalized, I think, by the time we get to a normal holiday. And will customers, I was talking about this with someone yesterday, there is this forgiveness from consumers around retailers who didn't get it quite perfect, but were nimble. And this is a theme we've covered many times. Is that forgiveness go away? And it's like, I rush back to the stores. I've missed them so much. And then they go like, oh yeah, I forgot. This kind of sucks sometimes. I'm getting back into that store, right? Like, and you see that in some of these results. And I'm not sure what sense we're going to be able to make of it over the next quarter or two, but I think it's going to take a bit of time to sort itself out, eh?
Most likely. I mean, I definitely get a sense, I'm here in Dallas, which has been more open than certainly many parts of the world, but many parts of the United States. But I think even given that, now that we're opening up more, I think there's a real sense of excitement around, like I'm on this board and we've done virtual meetings for 15 months. And in a couple of weeks, we're going to do our first in-person meeting. And you can just tell me like, oh my God, like we're going to be all like together.
You're going to shake hands? You're going to shake hands? Yeah.
Well, we'll see. We'll see what the protocols are. But I think, there's just this like overlying excitement to go out to dinner or a movie or whatever. But I think to your point, like it's not newness of it, but just kind of getting back into it will carry things for a while because it's more the energy around it as opposed to what am I really trying to accomplish. But it definitely feels to me like, as we get the back part of the year, we'll be a little bit more back to kind of what is familiar to us. But, this open question of, how much work from home persists, because that obviously we've talked about this a bunch of times, but that has impact on clothing, that has impact on restaurants. I think
that's one of the most interesting. I think that's one of the most interesting and potentially actual real changes that COVID brings is, have we changed the culture enough? Because I see the mistake that some businesses make. They basically take what they used to do before and just move it onto Zoom, and it's just burning people out. Yeah, because you see the numbers across North America, around the world. People are working more hours. They're feeling more stressed, and it's a little hard. So is there this? We often hear this hybrid approach, right? Where you can be in the office a couple of days, and there's some pretty compelling economics around the hybrid approach. Really, you don't have to invest in as big as offices, and people. They can't live wherever they want, though. They're expected to be in the office. So that's I think people got a bit ahead of themselves, perhaps. I'm never going back to the office, and then, we want you in there 2 days a week, and you live a plane right away. Maybe,
Sure. So that's why I think you have to pick out, you have to kind of unpack, overused term, but I think you have to unpack what are like the really fundamental strong reasons for behaviors to persist. And certainly to your point, there's a lot of economic savings to downsizing your office, saving commuting costs, the just emotional toll. Yeah. But at the same time, whether we're talking about the office or we're talking about shopping in a store, we're social animals. People like to be with other people. People like to be in the same place enjoying an experience together. It's just not the same watching a YouTube video of your favorite band as going to the concert, right? That doesn't mean there won't be some permanent shifts. But I think there is a little bit of an underestimation of, how purely digital or virtual things can be. But we'll see. This is, my unprecedented use of unprecedents, right? I mean, that's what we've been saying. And so I think we can glean some things from our collective experience and just our intuition about it. But we don't have a lot of good frames of reference for this time. So certainly it'd be pretty dynamic.
There's a Canadian joke about our Constitution. There's a clause in it called the notwithstanding clause, which is basically like an out clause of everything. And the phrase is notwithstanding the notwithstanding clause. Just trying to figure out what's going to happen. Now, we're not going to do remarkable or forgettable this episode, but we've been circling around it. We should probably touch for a couple of minutes on these blockbuster kind of results that came out, Macy's, Kohl's, Walmart and Target, because we're not really a breaking news podcast, but the way you and I see these things is they kind of are, the news is a launching point to a more interesting discussion around strategy and what's happening. So Macy's profit surprise, you actually said earlier, ironically, department stores are the one thing left standing sometimes in cities because they're the one shop stop and they've got some financial wherewithal to survive. At the beginning of the pandemic, many thought, well, okay, that's it. Your usual cast of characters, they'll never last through this. They'll never make it. But actually, they actually have made it and haven't done too bad. Like, look at the Macy's and Kohl's results.
Well, yes and no. I mean, I absolutely believe that the department store sector, and there's always a little bit of question of, well, is Target a department store? Is Kohl's a department store? But certainly the kind of traditional mall-based department store, that business has been contracting for 20 plus years. And I think it will continue to contract. But in Macy's case, they're not literally the last man standing, but they are the cream of the crop, as somebody used to say, who worked for me. Not the most elegant description. But, they were...
It's memorable, though. That's a very memorable description.
Yeah. But they were, very much hit both by store closings last quarter and by people not investing in going out kind of apparel stuff, which is a lot of what they sell. So to have a big swing is not surprising. And as we were talking about earlier, I think, the profit comparison is kind of, was so terrible a year ago that to have eked out a profit with all the lockdown on expenses and tight inventory and all that kind of good stuff is not surprising. They are talking about adding some new product lines.
Small store strategy.
The small store strategy is probably a whole separate episode. But, the idea of opening off-price, 15 years after off-price became a thing. So the whole off-price thing, I'm just a little skeptical that that's going to be a game changer. And we'll see what happens with these Market by Macy stores. But the first two are here in Dallas and very uninspiring. And they managed to create a very kind of boutique feel in terms of the assortment and the design, which I think is actually quite good. And then you buy this really expensive item and they put it in a Macy's plastic bag. And the promotional signs are all the same ones they use in the department store. So that's just ridiculous, like unforced error. So that's certainly fixable.
An own goal, as we would say in the
and they're they should go take a look at Nordstrom Local in terms of how to do the omni-channel fulfillment stuff. So I think there's just a lot of problems with that. But it's two stores; they're going to open some more. They can fix that.
They'll figure it out. Yeah.
But when you think about the size of Macy's, how much volume could these stores do? And it's going to be a long time before this is even even if it works, it's going to be a long time before it's even a couple $100 million business, which is almost a rounding error at Macy's, unless they keep shrinking. In which case, it's one way to get the percentage up. But when then we talk about Kohl's, which I think is kind of the most direct, solid competitor. Yeah, I mean they did pretty well, but again, they're comparing sales were up 70%, but against a really small base. So their sales, you were talking earlier about comparisons to 2019. So Macy's sales, I believe, were 10% below 2019. Kohl's sales were 5% below 2019. So they're not even back to even. So I think that's the thing to pay more attention to. And Kohl's also, they've been talking about getting a lot of returns traffic because they accept Amazon returns, and that's going pretty well. But I'm kind of like, well, if that's the thing that's driving a lot of incremental traffic, then a lot of the rest of your business must be down pretty significantly, which doesn't give me great comfort. So their forecast is that they won't get back to 2019, and they have a pretty cautious outlook. So I don't, as much as there's a lot of news about the great increases there. I mean, the reality is these guys are not even going to get back to 2019. It doesn't look like. We start to talk about Walmart and Target. This is pretty interesting. I mean, Walmart was up, say only 6%, digital up 37%, which is below where they've been, but really great profit performance. But then you got Target that was up 23%. Digital up 50, but interestingly, that percentage increase, which is great. A year ago in the quarter was up 151%. So I think we're seeing, as I've mentioned a few times, the great acceleration start to move more towards the great moderation. But it's interesting to me that Target did so much better than Walmart. And I don't know if that's because Walmart is more reliant on grocery. And so a little bit of the shift to eating out maybe damp that down a little bit. I don't know. Do you have any sense of that?
It seems that, from an innovation perspective, Target, I give the nod to Target. I mean, Amazon certainly is no amateur at innovation, certainly particularly around the fundamentals and distribution and those things. But Target seems to have some momentum, which they lost for a few years, for sure. I think they really invested well in things like in-store experience, which, on any given metric, any given survey, Target in-store experiences outperforms the Walmart in-store experience, like from a customer
and they've
experience
been, I think, doing a really good job with the private brand expansion and some, not only making that a higher balance of sale, but some interesting partnerships with some digitally native brands and those kinds of things. So I think the customer experience, the product innovation is quite good. They also announced that they're going to be spending $4 billion on stores, opening up 40 stores and remodeling 150. So they certainly don't seem to think that physical retail is dead. Well, one other thing I just want to point out quickly is they shared a bunch of stats about their, I don't know what you want to, I'll call it, I guess, their harmonized retail experience, but the intersection between digital and physical. So what they call drive up, which is curbside, I believe, up 123% from a year ago. Now, I don't know how well deployed they were in the first quarter because, curbside for a lot of people didn't even exist. Buy online, pick up in store up 52%. And their delivery service shipped, so home delivery, up 86%. And I don't have the number in front of me, but they did quote a very large percentage of their e-com orders are fulfilled from store. So it's just really interesting how they have not only improved their e-com capabilities, but how much the store is involved with supporting their, what we call e-com, but it's really a blend.
And of course, they took a different approach for that by backward integrating and buying shipped as opposed to going with an Instacart. I guess my final thought on that is, Walmart seems to have really addressed themselves to take on Amazon, like over the past couple of years. It's like we feel like, we're going to align everything to make sure that we can beat Amazon at whatever game we're going to play together, even launching a kind of a Prime-like loyalty program. Whereas Target kind of said, we're just going to focus on the customer. We're going to go, they seem to kind of acknowledge Amazon, whereas Walmart really said, that's our number one objective. We need to grab back that, we're number one. And that's where all their investments and focus and mental energy was poured into. So I think it's just interesting. I mean, it's a good long game to play. As if you're Walmart, you say, what's the risk to our business on a global scale? Probably more Amazon than it is Target, right? Target's in one country, Amazon's around the world.
I believe that's generally right. The thing I wonder about a little bit with Walmart, and we've seen some reports on some of the things they're worried about in terms of their ability to take on Amazon head to head, is Walmart is a company that is so focused on efficiency. And so it's kind of like, if all you have is a hammer, all you see are nails. And so I think that they're focused on, supply chain and pricing and massive assortment, like to your point, kind of trying to go head to head with Amazon, but leverage their stores as a point of differentiation. It's a pretty good strategy, but I just wonder whether they know how to, or they spend enough time on the effectiveness side, the product side, elevating the experience. I'm not suggesting they turn it into a Nordstrom or something like that, but but Target, if anything, I think has been criticized for not being as good on the efficiency side as Walmart. But they clearly seem to understand visual merchandising and product differentiation better.
If you look at who's opening stores, you do these store count checks. The biggest growth in stores is what in America? It's dollar stores, which really eats away. It's another eating away more at, I think, Walmart than Target. I mean, it impacts both.
But for sure.
It erodes Walmart's overall share of retail more than. So I think they're in a defense. If you and I were putting a matrix together, what do we defend and where do we grow? You got to defend against that dollar store expansion. What seems, $5,000, $6,000, $7,000 stores. That's not stopping. That's been happening for years, and that comes right at the base of the Walmart consumer versus the Target. I think so the dynamics are different. I wish I think back to the analysts, right? These are the conversations you hope are having with the analysts and trying to understand and piece these things together. But they seem to be kind of trying to figure out and piece together the elephant one piece at a time and missing some of maybe the bigger picture. Let's talk about the bigger picture for a sec. Is kind of the time we have left. We're all now turning our minds to the post-COVID era, and there's a bunch of things to think about. We've talked already about a bunch of them. There's I think about it in the short, medium, and long term. In the short term, this summer through to holiday, you've got, more distortions. You don't really have any tourism to speak of. You've got, different places around the world adjusting, not a lot of business travel, people starting to get back to their lives. The medium term, things get a little more interesting as people start to say, okay, the euphoria is kind of ebbing off. I think it'll be a fantastic holiday season because it'll be a normal holiday season. People will travel. I mean, I'm sure American Thanksgiving, Canadian Thanksgiving will be much, much different than it was last year.
Sure.
And this return to office. So what are the things in your mind, if you had to kind of tick a box from if you're sitting with a client, you say, okay, here's the 3 or 4 things we need to understand and keep a close eye on that are more structural. All right. What would those things in your mind be?
A couple things. I mean, certainly there is what part of the market do we play in? For example, if you're talking about luxury, like, I used to work at Neiman Marcus. I mean, the international tourism business was very important. The big occasion business, weddings, going out, charity events, all that kind of stuff drove a lot of business. So trying to understand the pace at which some of those things that really drive demand are likely to come back. I think when you get more on the discount, or not even discount side, but the more massive market, a lot of things around the delivery dynamics. How much does curbside pickup persist? What's going to happen with home delivery? I just got off a conversation with someone about the dynamics of home delivery, and as we've touched on before, it's just way cheaper to get the customer to come to the store to get it as opposed to paying somebody.
I am hearing curbside. Here in Canada, I am hearing curbside ebb off a little bit.
That's what I've been hearing. Little minor research. Just in general, some of the places I go, my grocery store, Target, some other places, Best Buy, been in a few times, just seems way less busy. So, what does that mean for economics? What does it mean to, is that because customers are happy to come in the store? Is it because now they've gotten used to buying online and maybe I'll just, ship it home. So I think the logistics fulfillment side, there's so much wrapped up in that in terms of doing it well, and doing it cost effectively. So understanding those dynamics in terms of the consumer behavior and how it reflects on your economics, because, and I know we touched on this before, I don't think you can necessarily project forward based on the adoption of some of these things, because retailers were being, frankly, desperate in some cases just to preserve the volume, and consumers were so freaked out that they were opting for things because they either couldn't go to the store or they could, but they didn't want to. Well, now if they can go to the store and they start to go like, wow, I mean, this isn't the Target world. This is the food world. But I ordered some Thai food the other day, and the item was $10, but it ended up costing me $22 because of the delivery fees, the tip, the whole thing. And
you start to wonder, I don't need to do that anymore. So,
I didn't do it out of safety. I did it just because I was very busy. I don't have time to cook or whatever. But you start to look at that over time, and the cost of doing that. I think there'll just be a different demand kind of equation, and the retailers that whether they're paying Uber Eats or Shipt or those fees or costs to do home delivery. I think there's going to be a lot more scrutiny on that going forward. So that will affect how it plays out.
That's why I thought they'd be more focused, and we'll see, more focused on encouraging curbside, because at least. It's an expensive way to do store retail, but it's a very inexpensive way to do online fulfillment relative to the alternatives. So, I don't know. I'm surprised a little bit at how quickly that's pulling back. Both from I think this is one of these, what happens in the short versus medium term, because I think consumers will rush back to the stores and then go, well, this wasn't as much fun as I thought it was. Kind of like the workplace, right? Geez, that 2-hour commute wasn't fun after all. Why am I jonesing to get back to the office again? And then they'll go, hey, maybe I'll go back to that curbside. So it'd be interesting. Okay, so that's a big one. What other key things are you looking at to kind of say these are the indexes? If I index these 3 or 4 things, that'll give me some sense for how things are going to unfold in the next 18 months.
I mean, I think work from home and how that plays out is huge. We've already touched on that. I guess the other one is really, going out, whether the going out is to eat at a restaurant, go to a movie, go to a play. I mean, certainly, I think all those things are going to increase dramatically. But do we get back to where we were before? That's a big variable. And, obviously, if you are going to the theater, right, then you're maybe eating at a place down the street.
For every action, a reaction, right? So all this spending does just the big giant whooshing sound as it comes out of retail and goes back into the service sector.
Yeah, I mean, a couple other things, or maybe they're all one thing, is how does physical retail evolve? Because, and I know we've touched on this before, and I think it'd be actually great maybe to really get into this in detail, but where retail has gone, or stores have gone from basically places for the consumer to go look at stuff, check it out, and bring it home. Still got that, right? But you've got the showroom part of it. You've got now all this digital fulfillment. And so to use your example, if we're not doing as much curbside pickup, is that because we're going into the store? And are we going into the store to actually shop, or are we going into the store to do buy online, pick up in store? If there's a lot more buy online, pick up in store, or buy online, return to store, how's our store set up to do that with a good experience? And so, Target is fulfilling I'm still trying to figure out how this works because they quote these amazing numbers for curbside pickup, buy online, pick up in store, and fulfilled from store. And when I go to Target, I don't see it. What does that look like? Are they fulfilling all these e-commerce orders when the store is closed? Because there aren't much people running around the store, from what I can tell, picking and packing, picking the orders. So, and what does that need to look like long term? If that activity is halved, then you don't necessarily want to totally redo your store model or reallocate space. So I think trying to figure out operationally and from a capital perspective what kind of investments you need to make to respond to this much more blended shopping world, it's a huge question. And I think it's because it's so expensive and it takes so long, and from an operating model can be potentially much more complicated. You don't necessarily want to make those big, bold moves if you don't know how some of this stuff is going to settle out. So I think that's a really hard thing to plan out at this point.
I was looking at a study. Yeah, it's a bunch of scenarios, right? I mean, I was looking at a study that was put out by in conjunction with Wharton and actually a friend of mine, Paula Courtney, and she always takes the approach, and we did work together, of what are the experiences in retail that break loyalty. So she comes at it from the other side.
Yeah,
and it was fascinating, and we talked about it a bit off mic. The list that came out last month. There's 10 things. What are the top 10 things? And I said, show me that list from 10 years ago. And what a dramatic difference. 10 years ago, it was slow checkout times, long lines, can't find a parking spot, all the things you think. This year, the top 8 out of the 10 were all had to do with the integration of online and physical retail. Yeah. The store inventory online was wrong. It said long lines for the pickup. That's been, in my mind, the transformation from customer expectation is they don't expect, after all this, to see that kind of, this isn't the store, this is the online store kind of nonsense. That still happens every now and then. You show up, we don't actually have that online thing. And this is where I think to watch out, from my perspective, and this is going to be great fodder for our season 3, which is be careful of the lessons you learn from the COVID era. And, the fact that consumers gave, I think, a fair bit of forgiveness or wiggle room around things that weren't perfect, I think that'll be short-lived. Yeah. And, the demands to have, I think perhaps one of the long-lasting implications of COVID that was accelerated, to give our nickel to our friend Carboutet, was that the expectations of these two things, they need to be together. If you're going to be a remarkable retail, step one, foundationally, I need the basics to work. And the basics are no longer long checkout lines or fast checkout or whatever. It's, listen, I want the store inventory to be accurate. I want it to be online. I want all these things to merge together. And that, I think that's a new litmus test of customer experience and success. Well, all right. Well, we've kind of a wide range and great discussion, actually. And we'll be talking more about season 3 later on, maybe next podcast. Again, we got great interviews coming up to wrap up season 2 with Rob and Matt Shea from the NRF. And so we're looking forward to that. We'll get back next week with Remarkable or Forgettable, because that's just a pile of fun too. But overall, that's kind of a wrap on this episode.
Well, yeah. And if you like what you heard, please follow us on Apple, Spotify, Amazon Music, or your favorite podcast platform, so you can catch up with all our great interviews and insights. And new episodes will show up every week. And please, 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 don't make me beg. Take a minute to drop us that elusive 5-star rating. And why not tell a friend in the retail industry about how remarkable this podcast is? I'm Steve Dennis. The expanded and completely revised second edition of my best-selling book, Remarkable Retail, How to Win and Keep Customers in the Age of Disruption, is available at Amazon, Indigo, bookshop.org, or just about anywhere books are sold.
And I'm Michael LeBlanc, producer and host of the Voice of Retail podcast. And you can learn more about me on LinkedIn or on meleblanc.co. Steve, have a safe weekend, and I will talk to you next week.